But what happened in the greatest recession in recent memory in 2020, when the world was forced to shut down, was that the liquidity increased and the risk assets went up, even though the world was in a recession. So recessions are not really indicative of what's going to happen to a risk asset like Bitcoin at this point. So to say that you need to worry about how Bitcoin is going to do in a recession, I'll tell you how it's going to do. It's going to do fucking amazing in a recession, because what's going to happen is the recession is going to happen, something's going to break, they're going to print a bunch of money, and that money is going to go into risk on assets, and risk on assets will do well, like they always do. The one thing that I was thinking about was that you could argue that Bitcoin was alive during the 2009 financial crisis, right? But it wasn't a big enough asset to really pay attention to. But what is interesting is, they always say, oh, Bitcoin's never experienced a recession. But you know what Bitcoin truly has never experienced? A demand shock, right? Bitcoin has a programmed supply shock, but it's never truly experienced a demand shock. I was thinking about this a few days ago, and I started doing some research into it. There's always two levers on any asset, right? There's the demand lever and the supply lever, right? And we already know what's going to happen to Bitcoin's supply lever. It stays strong because it's fixed. Whereas the demand lever can crank up or crank down. Like we have the ups and downs in the bull and bear cycles. So I started asking myself, like, what has happened, during these bull market runs that everyone talks about? What has actually happened in terms of the demand level? Like, has that gone up or down, or what's actually happened? The best information I could find is that in the 2021 cycle, there was roughly $40 to $50 billion that went into crypto. That includes the NFT monkeys, the Solana, the Ethereum, the VC bullshit, everything. And so you think about it and you go, well, what would have gone into Bitcoin? And let's say it's somewhere between 20 and $25 billion went into Bitcoin. Kind of makes sense when you think about it, right? MicroStrategy was a few $1 billion. Can't really have been much more than $25 billion going into that cycle. And that was the cycle that took Bitcoin from $3,500 a coin to $69,000 a coin with just $20 billion, $25 billion. So yes, $25 billion coming into the market is enough to take the market cap of Bitcoin from, 300 or 400 billion to $1 trillion. It's absolutely enough. And that's where Bank of America study and that whole video on the bull market multiple came in. So the point here is that Bitcoin's really had, 20 to $30 billion worth of demand shock. That's nothing. There's $300 trillion in real estate. And then I started thinking about, like, okay, well, what would be a true demand shock for Bitcoin? And then I started looking at some Fundstrat research, and they started saying that right now Bitcoin's price is being maintained where it is with $25 million of purchasing on a daily basis. So that is $25 million of Bitcoin wants to be bought and $25 million worth of Bitcoin wants to be sold, and the price stays at its equilibrium level. And we already know that every 4 years the supply goes down by half, so the supply makes the price move up to here, and then if the equilibrium, either the demand goes away or the price has to come up to meet it, right? So the price has to increase to meet the supply shock. And recently Mark Yusko said he could see $300 billion being allocated to Bitcoin because of the ETF. And then you start realizing that Bitcoin has never truly experienced a demand shock. All of these morons are going on about their recessionary doom and gloom bullshit. Bitcoin has never experienced a moment where, like Tesla did, where suddenly every Russell 2000 fund manager needed Tesla in their portfolio, otherwise they were losers, and the stock went from $11 to $400. So I took $300 billion, and there's 252 trading days in a year, and I averaged it over 5 years. Right? Because I think that's a reasonable demand shock over 5 years, $300 billion of new purchasing. And so there's 252 trading days in a year, so there's 1,260 trading days over a 5-year window. And $300 billion divided by 1,260 gives us $240 million a day worth of purchasing. So suddenly you sit there and you go, the equilibrium price currently is being held where it is by $25 million a day of purchasing. And Mark Yusko is saying that $300 billion could come into the market, which could increase the daily demand, not the supply, the demand by 10x. And if the demand goes up by 10x and the supply goes down by 50%, what is this new equilibrium price? And if we were to ignore the fact that the price is set at the margin, ignore the fact that there's only less than 2 million Bitcoin on exchanges, ignore the fact that 4, 5, 6 million Bitcoin have been already lost, ignore the fact that there's other vectors of demand that could come into this as the game theory takes over, you're looking at Bitcoin price going from 25,000, which is what it is right now, the equilibrium price, to 250,000 as an equilibrium price based on just this level of demand coming into the market. So you got the price accelerating to the upside. You got the Hunger Games starting with the wealthiest people on the planet. They're looking at the price going, it just went from 100 to 150. I need to buy some of this. I need to jump on board. They jump on board, it goes up. Now they're incentivized to hold on to it longer, so it goes up even more because the price is set at the margin. Now this $300 billion is now looking at this market going, wait a second, I'm going to miss out. I thought I was going to allocate over 5 years. If I don't allocate it right now, I'm going to miss out. So then this 300 billion goes, okay, I'm going to, instead of doing it over 1,260 days, I'm going to do it over 500 days, which is 2 years, 252 trading days in a year. And now there's $600 million of daily demand going in when the equilibrium demand was 25 million. This is how the Hunger Games begin. And Bitcoin has never, ever in its history, ever experienced a demand shock. We've been so well trained to experience supply shocks on Bitcoin. We have never, ever experienced a demand shock on Bitcoin. So the real question here that you need to ask yourself is, do you truly understand what will happen to an asset when you get a demand shock like this? The Rolex Daytona had a demand shock in the previous, during 2020, and it went from a watch that's a $12,000 watch was selling for $60,000, right? And what happened to that? Rolex replied by increasing their supply and making other adjustments to tamper down the market. Guess what? No, but guess what we cannot do with Bitcoin if we see Bitcoin go from $25,000 to $250,000 to match an equilibrium price. We can't increase the supply. In fact, the supply goes down. How much do you want your territory to matter to your progeny? That's the question here. Because this demand shock has never been felt, and there's no other asset on earth that it can be felt with, because like gold, if $10 trillion wants to go into gold, suddenly all the governments start issuing gold permits to mine. What are you going to do with Bitcoin? You can't do anything. You cannot affect the supply. There is finality of supply on Bitcoin. Now is not the time to get complacent and start worrying about the economy, start worrying about what's going on, start worrying about, oh my God, when's the liquidity cycle going to change? These are all short-term things. Think long-term. Just think long-term. There are only 21 million Bitcoin. There is already, worldwide liquidity of $900 trillion, and all of it is going to want to change the prime asset. And the prime asset is Bitcoin. It can be everywhere and nowhere at the exact same time. It is solid and flexible at the exact same time. I can spend a fraction of it and I can store all of it at the exact same time. There is true finality of scarcity on this asset, and that's what makes it the best asset humanity has ever seen. It is time that you start taking this seriously and stop mentally masturbating about the downside of Bitcoin when you are completely misunderstanding the demand side of Bitcoin, the upside of Bitcoin. It is imperative that if you want to stay relevant, you want your family to stay relevant, that you own a piece of this asset. These new buyers are far superior to you and I. Despite all of that, the 3 rules of Bitcoin remain the same. Step number 1, you buy Bitcoin. Step number 2, you shut the fuck up. And step number 3, you get fabulously wealthy.